Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of all the corporate jargon that makes your eyes glaze over. In this video, we're diving into a fresh filing from Strive Incorporated, and let's just say they're making some moves that are definitely worth talking about. Before we get into the nitty-gritty, if you are into breaking down these big financial reports into plain English, make sure you are subscribed. And hey, we've got a growing community over on Discord. The link is in the description below, so come hang out. So Strive Inc. is filing a Form 8, which is basically a current report to let everyone know about some major unexpected events. Think of it like the company shouting out a really important announcement. This particular report is dated the 22nd of January 2026, and it's all about some big financial dealings. Right off the bat, we see they have some securities listed, including their variable rate series A perpetual preferred stock, which trades under the ticker SATA on the NASDAQ, and their class a common stock ticker AST also on the NASDAQ. These are really just the different types of ownership pieces of the company that people can buy and sell on the stock market. Now, here is an interesting little checkbox. Strive is identifying itself as an emerging growth company. This means it is a relatively new company, and because of that, it gets to follow some slightly less strict rules when it comes to reporting its financial details. It is like getting a bit of a break while you are still growing. The main event here is the company entering into a really important agreement, what they call a material definitive agreement. On the 22nd of January 2026, Strive entered into an underwriting agreement. Think of underwriters as the folks who help a company sell its stock to the public. They're acting as the middlemen, specifically Barclays Capital Inc. and Cantor Fitzgerald and Company. What are they selling? They're planning to issue and sell 1,320,000 shares of their variable rate series of perpetual preferred stock. This is the SATA stock we saw earlier. This offering is actually an increase from what they had previously announced, meaning they're raising more money than they initially planned. The price is set at $90 per S-share. This sale is expected to wrap up by the 27th of January 2026, assuming everything goes according to plan. So, how much money are they bringing in? They estimate this offering will bring in nearly $118.8 million. That is a pretty big chunk of change, but remember, this is before they pay the fees and expenses associated with selling all those shares. Now, what are they going to do with all this cash? The plan is to use these funds, along with some existing cash and possibly money from closing out some other financial deals, to do a few key things. A big part of their plan is to deal with what they call the Semler convertible notes. These are notes like loans that can be turned into stock due in 2030. They were issued by Semler Scientific, which is a part of Strive. The funds will be used to pay off, repurchase, or otherwise handle all or a portion of these Semler convertible notes. They also mentioned paying off other borrowings from a company called Coinbase Credit Inc. The goal here is to shift back to a business model that relies mostly on preferred stock, not these convertible notes. And here is something that really stands out. A significant portion of the money is earmarked for buying Bitcoin and things related to Bitcoin. This shows a clear strategy of using company funds to invest in digital assets. Of course, they'll also keep some money for everyday business needs and general company operations. The agreement itself, the underwriting agreement, includes all the standard stuff you'd expect in a deal like this. Both sides make promises, there are conditions that need to be met for the sale to go through, and there are agreements about who covers what if something goes wrong, especially related to the securities laws. Moving on to other events on the same day, the 22nd of January 2026, Strive also announced they plan to make private exchange agreements. This means they will be negotiating directly with some holders of those Semler convertible notes, specifically those with $90 million worth of these notes. In exchange for giving up their notes, these holders will receive about 930,000 newly issued shares of the SATA stock. This is separate from the public offering, but clearly related to their overall plan to manage their debt and capital structure. These exchanges are also subject to final agreements and meeting certain conditions. Now comes the part where they have to warn everyone that not everything in this report is a guarantee of the future. They include a cautionary statement regarding forward-looking statements, which is a standard legal disclaimer. Basically, they're saying that anything they say about future plans, expectations, or outlook might not actually happen. They list out many words that signal these are forward-looking statements like may, will, anticipate, expect, could, and plan. They are being upfront that risks and uncertainties could cause actual results to be very different from what they're hoping for. Some of the big uncertainties they mention include general market conditions and whether this whole offering will even happen as planned or at all. There is also the risk that things might not go as smoothly as they anticipate. They're also acknowledging the possibility of legal trouble, which could come from anyone suing them or the combined company. This is a really interesting point. They directly link potential failure to realize benefits from a merger to problems that might come up with their Bitcoin strategies and the inherent risks of Bitcoin and other digital currencies. This is a crucial risk for any company heavily involved with crypto. They also warn that all these big deals might distract the management team from actually running the day-to-day business. And for the regular shareholders, they mention the risk of dilution. This means that when a company issues more shares, the ownership stake of existing shareholders effectively gets smaller, which can impact the value of their shares. They even throw in that there could be other completely unexpected problems that hurt their results. It's a lot of legalese, but the core message is clear. The future is uncertain, especially with their heavy Bitcoin involvement. For anyone who wants to dig even deeper, they refer to previous filings like their Form S-4 and other reports they've filed. This is where you'd find more detailed information about the risks and the business itself. Finally, we get to the exhibits. This section lists all the supporting documents that are part of this filing. Here we see the actual underwriting agreement is filed as Exhibit 1.1. This is the contract detailing the sale of those SATA shares. And Exhibit 99.1 is the press release that accompanied this announcement. This is usually where companies put a more polished, public-facing spin on the news. And then we have signatures Matthew Cole, the Chief Executive Officer, signed off on this report on the 22nd of January 2026, confirming that Strive Inc. is officially making these announcements. So what is the big picture here? Strive Inc. is clearly in a significant transition phase. They're raising a substantial amount of money through a preferred stock offering, which is a way to bring in capital without diluting common shareholders as much as issuing more common stock might. The most striking aspect is their clear commitment to Bitcoin. Earmarking millions for Bitcoin acquisition is a bold move. It puts them squarely in the camp of companies leveraging digital assets for their treasury. This is exciting for crypto enthusiasts, but also carries significant risk, as the value of Bitcoin can be extremely volatile. The fact that they acknowledge this volatility and the potential problems it could cause in their risk statements is important. They're also actively managing their debt, specifically looking to retire those similar convertible notes. This likely aims to simplify their capital structure and reduce interest payments. The exchange of debt for preferred stock is a clever way to do this while also potentially increasing the amount of their preferred stock in the market. Overall, Strive seems to be positioning itself with a mix of traditional finance through preferred stock offerings and a bold embrace of cryptocurrency. The success of this strategy will heavily depend on the performance of both the stock market and, crucially, the price of Bitcoin. What do you think about Strive's big moves into Bitcoin and their capital restructuring? Let us know your thoughts in the comments below. If you found this breakdown useful, please hit that like button and subscribe for more decoded corporate filings. And don't forget to join the conversation on our Discord server, linked in the description. Thanks for watching, and we'll see you next time.